is conducted strictly for educational purposes only. We do not provide financial advice, investment recommendations, or guaranteed profits. Forex trading involves significant risk, and you may lose part or all of your capital. Any trades shown are for learning and demonstration only and should not be copied blindly. Please do your own research and consult a qualified financial advisor before trading. By continuing to watch this stream, you agree that Vaivamm Capital is not responsible for any financial outcomes. Trade responsibly.
Good evening, everyone, and welcome back to today's live market analysis and trading education section. I hope you are all doing well and ready to understand today's market behavior with clarity and discipline. As we discussed in yesterday's section, the market has been showing clear directional movement along with structured price movement. Today we will continue building on that understanding by analyzing how professional traders interrupt live market conditions and execute trades based on confirmation rather than assumptions. In today's section, we will be focusing on understanding the current live market structure, identifying high probability trading zones, learning entry confirmation techniques, managing risk and protecting trading capital, strengthening trading discipline and psychology. Always remember, successful trading is not about taking frequent trades. It is about taking quality trades with proper planning, patience, and risk control. Professional traders do not chase the market. They wait for confirmation, follow their strategy, and execute with discipline. If you are joining the session live, please confirm your presence in the chat section. Also, if you have any trading related doubts, feel free to drop them in the chat. I will address them during the section. Before we move into live charts, one most important reminding: risk management is the foundation of long-term trading success. Never enter a trade without a predefined stop loss, a clear target plan, proper position sizing, and emotional control. Now let us move the live chart and analyze the current market behavior. We will identify the potential trading opportunity only if the market provides proper confirmation and structured entry signals. Trading is a journey of consistency, discipline, and continuous learning. Short-term results may vary, but long-term success always belongs to disciplined traders only. Yesterday, the market witnessed significant volatility due to the release of the US NFP non-farm payroll. That is a very high impact news. As we discussed yesterday, the data come out stronger than market expectations, which indicated strengthening the US labor market. As a result, the US dollar gained momentum, creating strong bearish pressure on gold. Our signal was hit in target. Based on this fundamental strength combined with technical confirmation, we provided a sell signal and the market successfully moved towards our projected downside target. This is the one. Present market condition. Currently, the market is showing around consolidation phase actually. After the sharp volatility created by the NFP event, price is moving inside a structured range, indicating temporary equilibrium buyers and sellers between. From a technical perspective, the upper highlighted zone represents a strong supply and resistance region where selling pressure has repeatedly entered the market. The market is currently trading below this supply zone, which indicates that sellers are maintaining short-term control. On the downside, the blue market level is acting as the immediate support, which price has shown multiple rejections and liquidity reasons. Below this level, there is a deeper demand zone, which could act as a strong buying interest area if the market creates future downside movement. This is the zone. At present, the market is not showing clear directional strength. Instead, it is forming a range bound structure, which often occurs after high impact news volatility. Buyers are attempting to create short term recoveries. Sellers are still defending higher prices zone. Here, as we discussed yesterday, almost 5095, 5080 is the our selling zone. Yesterday, we keep the sell order at 5080. In this type of market condition, professional traders usually avoid aggressive entries. Instead, they focus on trading only near key supply or demand zones, waiting for strong confirmation signal, maintaining strict risk management, avoiding emotional or impulsive trades. If price moves toward the upper supply zone and show rejection, the market may continue bearish movement. However, if price breaks above the supply zone with a strong momentum zone, it may indicate a short-term bullish reversal. Similarly, if the market breaks below the current support level, it may trigger future downside liquidity movement towards deeper demand zones. That is, we can see near 5000 level, our psychological level, as we discussed on yesterday. After major fundamental events like non-farm payroll, markets physically and typically move into consolidation phase before forming the next major trend. Our patience, confirmation, and discipline are the key factors for trading successfully in such conditions. Today, we will dedicate the next 30 minutes to Forex trading education, how to make money in Forex trading. Yesterday, we briefly discussed some important foundational concepts building on that. Today, we will clearly understand one of the most important topics every trader wants to know, how to make money in Forex trading in a professional and sustainable way. And let's check the market newses. Now let us discuss one of the most important high impact economic releases scheduled today, the US initial jobless claims data, which is expected to be released at 19. There is 51 minutes more. This is US initial jobless claims data. In simple terms, it helps us understand whether employment conditions in the US economy are improving or weakening. Understand the current numbers. The market forecast for today's release is 22,000 claims. Forecast is 22,000 claims. While the previous reading was 231,000 claims. 231,000 claims. If the actual number comes lower than the forecast, it indicates that fewer people are losing jobs. This reflects strengthening in the US labor market and suggests that business are maintaining stable employment levels. A strong labor market usually supports economic growth and increases confidence in the US economy. And how it will impact on gold and USD. When jobless claims decline, it generally strengthens of the US dollar. Suppose we see here a reading that is higher than forecast is generally negative, bearish for the US dollar, while a lower than forecast reading is generally supportive, bullish for the dollar. When the US dollar strengthens, gold usually experiences selling pressure. As we see yesterday, NFP data will go positive and the dollar is positive and gold becomes a selling pressure. This happens because gold is priced in US dollars and a stronger dollar makes gold more expensive for gold buyers, reducing demand. So if today's jobless claims data comes lower than the forecast, there is a high probability of USD strengthen and bearish pressure on gold. However, if the actual jobless claims number comes higher than the forecast, it indicates weakness in the labor market. More people losing jobs suggest economic slowdown concern. In such a scenario, the US dollar may weaken and gold could again bullish momentum as investors often move towards safe haven assets during economic uncertainty. It is important to understand that high impact news event like jobless claims can create sudden volatility and rapid price movements. Professional traders usually avoid entering trades exactly at the time of news release because market spreads widen, liquidity shifts quickly, and price movements can become unpredictable. Instead, experienced traders wait for the market reaction, observe institutional direction, and then look for the confirmation before entering trades. During these news releases, traders should focus on whether price breaks key support or resistance level, volume and liquidity behavior, confirmation through price structure before trade execution. Labor market data like initial jobless claims plays a crucial role in shaping Federal Reserve policy expectations. Because of this, the data often creates significant impact across USD pairs and gold markets. Understanding not just the data but how the market interprets the data is what separates professional trading into from emotional trading. This is the very high impact news and US existing home sales also. Let's check US existing home sales. Now let us move to another important economic release scheduled today at 2030, which is the US existing home sales. The data is considered a key indicator of economic activity and consumer confidence in the United States. Existing home sales measure the number of previous owned residential properties that were sold during a specific period. It reflects the overall health of the US housing sector, which is one of the major contributors to economic growth. The housing market is closely linked with employment, consumer spending, banking activity, and interest rate expectations. Because of this, Housing data plays a significant role in influencing currency movements. For today release, the forecast is 4.16 million home sales, and previous reading was 4.35 million home sales. This indicates that the market is expecting a slightly slowdown in housing activity compared to the previous data. Additionally, the month-over-month data, which measures the short-term change in housing sales, previously showed a strong growth of 5.1%. Impact on the US dollar: if the actually home sales data comes higher than the forecast, generally supportive bullish for the US dollar. Strong housing performance increases confidence in consumer spending and financial sector strength. In such scenario, the US dollar usually strengthens because strong economic indicator increases the possibility that the Federal Reserve may maintain a tighter monetary policy stance. Stronger USD generally attracts global investment and supports currency appreciation. Impact on gold XAUUSD: when the US dollar strengthens due to strong housing data, gold typically experiences selling pressure. Gold is considered a non-yielding safe haven asset. When the US economy shows strength, investors usually shift towards higher yield investments, reducing demand for gold. This often creates bearish pressure on XAUUSD. If the housing data comes weaker than forecast, it may indicate slowly economic activity and reducing consumer purchasing power. In that situation, the US dollar may weaken, gold may gain bullish momentum, investors may shift towards safe haven asset due to economic uncertainty. Housing market data can create medium to high volatility depending on how far the actual data deviates from market expectations. Professional traders usually focus on market reaction rather than predicting the news. Price behavior around key technical levels. Institutional momentum after the news release, confirmation before entering trades. The housing sector is a critical indicator of economic stability in the United States because it reflects consumer confidence and financial health. This data can significantly influence Federal Reserve expectations and overall market sentiment. Understanding both the data and market reaction help traders make more informed and professional trading decisions. At the same time, we discuss about forex trading education. And right now, 30 minutes will be that section. Market knowledge and understanding, that is a key pillar to make money in the forex trading. The first step towards probability in forex trading is understanding how the market actually works, understanding price movement and market structure, learning fundamental factors like economic news and global events. Global events means whatever we talk now, economic calendar, and identifying trends and momentum behavior in market. Without proper market knowledge, trading becomes speculation rather than strategy, guys. And trading strategy and confirmation. Professional traders never enter trades randomly, they follow a tested trading strategy. A proper strategy includes entry rules, exit rules, stop loss placement, risk to reward planning. Consistency in following one strategy is more important than frequently changing strategies. This is the second important thing: trading strategy and confirmation. And mainly we have to focus on risk management, the most important factor. Risk management is the backbone of successful forex trading. Professional traders focus more on protecting capital than making profits. Important risk management principles include risking only a small percentage of capital per trade, always using stop loss, avoiding over leveraging, maintaining proper position sizing, trading psychology and discipline. This is the fourth factor. Emotions play a major role in trading success or failure. For example, if you place a trade buy, it will be going down, you will be panic, you will be wait for it's coming up, but still it's going to down only. You will never exit from the trade. But if it will be going on positive side, you will be exit easily. So trading psychology and discipline is most over that common mistake trader makes: over trading, revenge trading after losses, and closing trades too early due to fear, holding losses due to hope. Successful traders remain disciplined and follow their trading plan regardless of emotional pressure. This is the very important thing you have to maintain. This is the discipline. And fifth one is consistency over quick profits. Forex trading is not about making money in one trade, it is about building consistency over a series of trades. Market is reacting 5050. This is the support level. Okay, let us continue our education. Professional traders focus on long term growth, maintaining stable performance, learning from mistakes, continuously improving trading skills. To make money consistently in forex trading, traders must understand that losses are a normal part of the process. Probability comes from maintaining a positive risk to reward ratio and disciplined execution over time. We have to focus on that. And let's go to the topic of how to make money trading forex. And once coming to the live section, this is the support level. Currently, gold is trading around 5050 price level. At this moment, market is showing consolidation behavior, indicating a temporary balance based between buyers and sellers. From a technical perspective, the 50-50 zone is acting as an important short-term support area. Price has shown multiple reaction around this level, suggesting that buyers are attempting to defend this region. Above the current price, we have a strong supply and resistance around 5075, 5095 level, where selling pressure has previously entered the market. As long as the market remains below that supply zone, short-term bearish pressure may still exist. If price breaks below the 5050 support level with strong momentum, that market may look for downside liquidity towards lower demand zones. This could trigger future selling continuation. Bullish scenario we can expect, however, if buyers manage to hold the price 5050 and create strong upward momentum, the market may attempt a pullback towards the upper resistance and supply region. Currently, the market is positioned between key support and resistance levels, which indicates range bound behavior. In such conditions, professional traders usually wait for breakout confirmation rather than taking aggressive entries. because market completely in today range bound mode. After that, NFP data. Let's go to the education part. We discuss about yesterday what is forex trading, what is forex. You know everyone, the forex, also known as FX or foreign exchange. Market refers to the global marketplace where banks, institutions, and individuals speculate on the exchange rate between flat currencies. The forex market is the largest financial market in the world. And how does forex trading work? Do you know the question? How does forex trading work? As a forex trader, you are speculating on whether one currency will rise or fall in price against another currency. So, forex trading can be defined as the process of speculating on currency pairs prices to try and make a profit. The value of a currency is influenced by economic, political, geopolitical events, and trade and financial flows. Placing a trade in the foreign exchange market is simple. The mechanics of a trade are very similar to those found in other financial markets like the stock market, mutual funds. So if you have any experience in trading, you should be able to pick it up pretty quickly. How to read a forex quote? This is the currency pairs like Euro USD. I can show you. Euro USD, GBP USD, USD CAD, USD JPY, XAUUSD, odd USD. How do you know which currency you are buying and which you are selling? The reason they are quoted in pairs is that in every foreign exchange transaction, you are simultaneously buying one currency and selling another. How do you know which currency you are buying and which you are selling? Anyone guess? Anyone? Comment please. Whenever you have an option position in forex trading, you are exchanging one currency for another. Currencies are quoted in relation to other currencies. Here is an example of a foreign exchange rate for the Great Britain pound like GBP USD we can take. This is the GBP USD chart. The first listed currency of the left of the slash GBP, known as the base currency. This example, the British pound. The base currency is the reference element for the exchange rate of the currency pair. It always has a value of 1. The second listed currency on the right is called counter or quote currency. In this example, the US dollar. It will be pair up with GBP USD. When buying, the exchange rate tells you how much you have to pay in units of the base currency to buy 1 unit of the base currency. In example, we are buying a 1 GBP pound. When selling, the exchange rate tells us how many units of the quantity quote currency you get for selling 1 unit of the base currency. If you buy Euro USD, this simply means that you are buying the base currency and simultaneously selling the quote currency. Buy Euro, sell USD. For example, if you buy 0.01 quantity of Euro, you take a live trade. And we are exiting it. And we sell in USD. You would buy the pair if you believe the base currency will appreciate that gain value related to the quote currency. You would sell the pair if you think the base currency will depreciate, lose value related to the quote currency. With so many currency pairs to trade, how do forex brokers know which currency to list as the base currency and the quote currency? Fortunately, the way the currency pairs are quoted in the forex market is standardized. You may have noticed that currencies quoted as a currency pair are usually separated with a slash character. For example, some traders may type Euro USD as Euro USD or just Euro USD or Euro slash USD, Euro hyphen USD. And there is two types also. One is long and one is short. Are you looking for long or short? First, you should determine whether you want to buy or sell. If you want to buy, which actually means buy the base currency and sell the quote currency. You want the base currency to rise in value and then you would sell it back at a higher price. In trader talk, this is called going long or taking a long position. Just remember, long is nothing but buy. Once you have opened a long position, you can now say, I am long. If you want to sell, which actually means selling the base currency and buy the quote currency, you want the base currency to fall in value and then you would buy it back at a lower price. This is called going short or taking a short position. Just remember, short is sell. Once you have opened a short position, you can now say, I am short. If you have no open position, then you are said to be flat or square. See, once go to the present market situation. Market right now running at 5056. Markets respect our support level. We have to take entry here. And keep the stop loss here. And the target is here. You can take live position also in XAUUSD. Keep the stop loss here, 5046. Target is here. 1:1 reward. And we have to keep patience. Wait. Okay, let's continue. Then we have to go. All forex quotes are quoted with two prices, the bid and ask. In general, the bid is lower than the ask price. First of all, what is the bid? We have to learn what is the bid. The bid is the price of which your broker is willing to buy the base currency in exchange for quote currency. See here US dollar, we can see this is called bid price 1.18757. This is bid price. If you want to sell something, the broker will buy it from you at the bid price. And what is ask? The ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you can buy from the market. Another word for ask is the offer price. If you want to buy something, the broker will sell it to you at the ask price. So, for example, in Euro USD, we are seeing bid price is 1.18750 and ask price is 1.18772. This is the ask price. And the ask and bid price difference is called spread. And what is spread? The difference between the bid and the ask price is known as the spread. For example, on the Euro USD quote above, the bid price is 1.18736,737 remaining, and the Ask price is 1.18760, and that remaining difference is called spread. And what is the spread there? $22. That is the spread in the Euro USD. If you want to sell euro, you can click sell and you will see sell euros. And if you want to buy euro, you can click buy and you will buy euros. That is the spread. For example, if you want to buy 0.01 of euros, see, that will be applicable here. This is called spread. And next we have to know when to buy, when to sell. When to buy, when to sell in market. Forex trading involves trying to bet on which currency will rise or fall versus another currency. How do you know when to buy or sell a currency pair? In the following examples, we are going to use a little fundamental analysis to help us decide whether to buy or sell a specific currency pair. The supply and demand for a currency changes due to various macroeconomic factors which can drive currency economic rates up and down. Each currency belongs to a country or region, so Forex fundamentally analysis focuses on the overall state of the economic countries such as productivity, employment, manufacturing, international trades, and interest rates. Wake up. If you always feel asleep during your economic classes or just flat out skipped economic classes, don't worry. We will cover fundamental analysis in a later lesson. No issues on that. Example Euro USD. In this example, the euro is the base currency and thus the basis for the buy and sell. If you believe that the US economy will continue to weak, which is bad of the US dollar, you would execute a buy euro USD order. By doing so, you have bought euros with the expectation that it will rise versus the US dollar. If you believe that the US economy is strong and the euro will weaken against the US dollar, you would execute a sell euro USD order. By doing so, you have sold euros with the expectation that it will fall versus the US dollar. Understand, guys? In this example, the US dollar is the base currency and thus basis of the buy sell. For example, we can take USD JPY. This is the currency pair USD JPY. If you think that the Japanese government is going to weaken the yen in order to help its export industry, you would execute a buy USD JPY order. By doing so, you have bought US dollar with expectation that it will rise versus the Japanese yen. If you believe that Japanese investors are pulling money out of US financial markets and converting all their US dollars back to yen, and this will hurt the US dollar, you would execute a sell USD JPY order. By doing so, you have sold US dollar with the expectation that they will depreciate against the Japanese yen. And let us go to the GBP USD. This is also one of the major currency pair. In this example, the pound is base currency and thus the basis for the buy and sell, buy versus sell. If you think the British economy will continue to do better than the US in terms of economic growth, you would execute a buy GBP USD order. By doing so, you have bought pounds with the expectation that it will rise versus US dollar. If you believe the British economy is slowing while the American economy remains strong like Chuck knows, you would execute a sell GBP USD order. By doing so, you have sold pounds with the expectation that it will depreciate against the US dollar. And later we have to discuss about quantities. I think up to everybody is clear. Let's check our trade. Our trade is running in profit. See here, I take a 0.05 quantity in gold. Right now trade is running in profit around $25 to $30. This is a good execution, guys. 0.05 quantity. Yeah, this is the topic. Trading in lots. When you go to the grocery store and want to buy an egg, you cannot just buy a single egg, right? They come in dozen or lots of 12. In Forex, it would be just a foolish to buy or sell €1. So they usually comes in lots of 1000 units of currency, micro lot, 10,000 units, mini lot, or 1 lakh units, standard lot. Depending on the your broker and the type of account you have, more on lots. For example, EURUSD we are going, this is the lot size 0.01. 0.01 is called 1000 units of currency micro lot. And if you want to go 0.1, we have to change it. If you want to go to 0.1, 10,000 units, this is called mini lot. This is called mini lot. And if you go to standard lot, we have to mention one standard. It will become 1 lakh units of shares in EURUSD. Depending on your broker and type of account you have. And everybody know margin trading. Margin trading is very, very important. But I don't have enough money to buy 10,000 euros. Can I still trade? Everyone get that out. You can by using leverage. When you trade with leverage, you would not need to pay the 10,000 euros upfront instead. You would put down a small deposit known as margin. Here is the leverage. Leverage is the ratio of the transaction size, position sizing, to the actual cash trading capital used for margin. For example, 1:50, also known as the 2% margin requirement, means $2,000 of margin is required to open a position size worth $1 lakh. Margin trading lets you open large position size using only a fraction of the capital you would normally need. This is how you are able to open $1,250 or $50,000 positions with a little as $25 or $1,000. You can conduct relatively large transactions with a small amount of initial capital. Let me explain clearly. We will be discussing margin in more detail later, but hopefully you are able to get a basic idea of how it works. Listen carefully, because this is very, very important in margin trading. In Forex trading, definitely, this is very important. You believe that a signals in the market are indicating that the British pound will go up against the US dollar. You open one standard lot, that is called 1 lakh units. GBP/USD buying with the British pound with a 2% of margin requirement. You wait for the exchange rate to climb. When you buy one lot, that is called 1 lakh units of GBP/USD at the price of 1.36355, you are buying 1 lakh pounds, which is worth $1,50,000, 1 lakh units of GBP. Since the margin requirement was 2%, then US dollars consistently want $3,000 would be set aside in your account to open up the trade $1,50,000 into 2%. You now control 1 lakh pounds with just $3,000. Your prediction come true and you decide to sell. You sell the position at up of the buy. You earn about $500. When you decide to close a position, the deposit margin that you originally made is returned to a calculation of your profits or losses is done. This profit or loss is then credited to your account. Let's review the GBPUSD trade example above. GBPUSD went up by a half a pence. Now even 1 pence, it was half a pence. But you made $500 while taking a power nap. How? Because you were not trading just pounds, 1 pound. If your position size was 1 pound, yes, you would have made only half a pence, but your position size was 1 lakh pounds or $1,50,000. When you opened the trade, what's need is that you did not have to put up the entire amount. A small margin deposit can lead to large losses as well as gains. It also means that a relatively small momentum can lead a proportionally much larger movement in the size of any loss or profit, which can work against you as well as for you. You could have easily lost $500 in 20 minutes as well. Okay, coming to the trade. Our trade is exited in profit. Market respect as our strategy. Today we take one trade at the 5050 price level, 5055, identifying it is a strong short-term support zone where the market had previously showing buying interest and price rejection. Before entering the trade, I observed price stability around the support level along with signs of bullish momentum indicating a possible upward retracement. The entry was planned based on strong support holding above 5050, multiple price rejections from the support zone, short-term bullish favor, favorable risk to reward opportunity. The trade was successfully executed and exit the market at 5067. And this is the history of the trade XAUUSD. Our entry at 5057.15, exit at 5067.47, nearly $10, 100 pips. Thank you to market. This trade demonstrates the importance of waiting for confirmation at key support level. This is our support level. Entering trade with proper planning rather than chasing market, maintaining clear entry and exit strategy, following disciplined trade management. So that's why trade became a profit. Consistent profitability in trading comes from identifying high probability zones, executing trades with patience and respecting risk management principles. So we have to wait for another trade. Let me share a live trade experience with you all because real market execution teaches more than theory. When the market was trading around 5050 level, I was carefully observing the price behavior. I was not looking to enter immediately. I was waiting for confirmation because professional trading is about patience, not speed. At 5050, the market started showing strong reactions. Price attempted to move lower multiple times, but buyers kept stepping in and defending that level. This clearly indicating that the zone was acting as a strong support area. At that moment, I analyzed the structure, momentum, and risk to reward opportunity. Everything aligned with my trading plan. So with complete discipline and confidence in my analysis, I execute the buy trade at 5055. At 5055. Once the trade was active, the most important thing was no excitement. It was trade management. I stayed calm, monitored price behavior, and allowed the price to move naturally without emotional interference. Slowly, the market started respecting the support zone and bullish momentum began to build. Buyers gained strength and price started moving upward exactly as expected. And finally, the market reached the 506768 level where I closed the trade and secured profits. The target was achieved with proper planning, patience, and disciplined execution. This trade clearly shows one important truth about trading. This is the profit what I made today, $51 in the trade. Profits do not come from random entries. Profits come from waiting for the right zone, trusting your analysis and executing with discipline. The market always provides opportunities, but only patient traders are able to capture them. Remember, trading success is not about winning every trade. It is about following your plan consistently. When discipline becomes your habit, profitability becomes your result. Definitely. Okay, let's go to the education part. And we have to wait 8 minutes more to the news. US initial jobless claim, there is 8 more minutes. And where we stopped before, leverage. We are discussing about leverage. High leverage sounds awesome, but it can be deadly. For example, you open a forex trading account with a small deposit of $1,000. Your broker offers 1:100 leverage, so you open as a $1 lakh Euro USD position. A movement of just 100 pips will bring your account to zero. So one pip moves your account by $10. A 100 pip move is equivalent to $1,000. You blow your account with a price move of a single euro. Congrats. Definitely account will be blow. So that's why leverage will be, you have to, when trading on margin, it's important to be aware that your risk is based on the full value of your position size. You can quickly blow your account. If you don't understand how margin works, we want you to avoid this. Due to this danger, we dedicate an entire section on how margin trading works called margin trading. So I hope everyone understand about margin trading. And again, rollover. For position opens at your broker cutoff time, usually 5. There is a daily rollover fee, also known as swap fees, that a trader either pays or earns depending on the positions you have open. If you don't want to earn or pay interest on your position, simply make sure they are all closed before 5 p.m. Eastern Time, ET. The established end of the market day. Since every currency trade involves borrowing one currency to buy another, interest rollover charges are part of forex trading. Interest is paid on the currency that is borrowed. Interest is earned on the one that is bought. That is called swap fees. If you buying a currency with a higher interest rate than the one you are borrowing, then the net interest rate differential will be positive. I think everyone can understand margin also. Let's discuss about PIP. What is PIP in a forex? And what is points? What is pipettes? And what is lots? I hope lots will be understand. I think so. If anyone not understand, give me a comment on that. There is news right now. And what is pip? You have probably heard the terms pips, points, pipettes, and lots thrown around here. Now we are going to explain what they are and show you how their values are calculated. Here is where we are going to a little maths, just a little bit. The unit of measurements to express the change in value between two currencies is called a bit, is called a pip. A pip is usually that last decimal place of a price code. Most price go out of 4 decimal places, but there are some expectations like Japanese yen space. For example, Euro USD, we can see Euro USD, Euro USD, and what is the changing there? 1.18770, 1.18792. 95 will go to the 96, means that is called 1 pip. What is pipette? There are forex brokers that quote currency pairs beyond the standard 4 and 2 decimal places to 5 and 3 decimal places. They are quoting fraction pips, also called points or pipettes. How to calculate the value of a pip? Let me explain clearly. For example, we can take the live trade hours. We can entry at 5067.47. Sorry, entry at 5057.15. Our TP is 5067.47 and exit at trade is 5067.47. So 57 to 67, there is $10 of difference. On the $10 of difference, we can catch 100 pips. $1 equal to 10 pips. As each currency has its own relative value, it's necessary to calculate the value of a pip for that particular currency pair. For example, you can take USD CAD or Euro USD or GBP JPY. And how to find the pip value in your trading account currency. So pips is nothing but points. And what is a lot in Forex? What are the lot sizes in Forex? Forex is commonly traded in a specific amount called lots, or basically the number of currency units you will buy or sell. A lot is unit measuring a transaction amount. When you place orders on your trading platform, orders are placed in sizes quoted in lots. It's like when you buy eggs, you usually buy a carton including 12 eggs. The standard size of your lot is 1 lakh units of currency. And now there are also mini, micro, and nano lot sizes that are 10,000, 1,000, and 1,000 units. And standard lot indicates 1 lakh units, and mini lot indicates 10,000 units, and micro lot indicates 1,000 units, and nano Sorry. Some brokers are show quantities in lots, while other brokers show the actual currency units. A standard lot represents $10 a pip when using EURUSD as a base currency. A mini lot represents $1 a pip when using EURUSD as a base currency. A micro lot represents 0.10 a pip when using EURUSD as a base currency. What the heck is leverage? Let's check the news. Oh God. Initial jobless claims 227,000. This is the education today. We can discuss about live market. Now the US jobless claims data has been officially released, and let us analyze the numbers and their market impact. I actually got 2,27,000. So the initial jobless claim came higher than the forecast, which indicates that more people filed for unemployment benefits than expected. This suggests slightly weakness in the labor market. Similarly, continuing jobless claims also increased, which shows that more individuals are remaining unemployed or for long periods. Additionally, the fourth week average also increased, confirming mild labor pressure. When jobless claims increases, it generally signals weakening in the labor market. Signals weakening in the labor markets. Higher unemployment levels sometimes reduce expectations of aggressive interest rate tightening by the Federal Reserve also. Impact on gold: when the US dollar weakness due to weaker employment data, gold often receives buying interest because it is considered a safe haven asset. You can check once DXY. So dollar index probably down. This is called liquidity, buy sell liquidity yesterday, non-farm event. However, it is important to understand that markets do not react only to data numbers. The reaction depends on how significantly the data derivates from expectations and how institutions, traders interrupt the overall economic outlook. Traders should now observe whether USD shows sustained weakness, whether gold gains bullish momentum, breakout or rejection at key level, technical levels, volume and liquidity movement after news releases. After the jobless claims news releases, the market is expected to react around key liquidity zone rather than random price levels based on current price behavior and structure. Immediate resistance zone is 5065, 5075. Short-term resistance where sellers may re-enter 5085, 5095 zone, strong supply and institutional selling zone. As per we discussed on yesterday, this is the zone 5080 and 5095 level. If price breaks and sustains above this zone, it may trigger short-term bullish continuation. Immediate support zone is 5045 and 5050 zone. Already we executed the trade in here. Current intraday support and liquidity holding area 5025 and 5035 zone. Next demand zone where buyers may step in. 5000 and 5010 zone support. Strong institutional demand zone, major liquidity region, institutional liquidity explanation. Institutional traders do not enter markets randomly. Large financial institutions operate based on liquidity zones where large order executions becomes possible. Liquidity usually exits above price, previous highs, buy stop liquidity, below previous lows, sell stop liquidity, around strong support and resistance zones. During high impact news volatility, after major news releases, institutions often push price towards these liquidity zones to collect orders before establishing the next directional move. For example, if price move above resistance, institutions may trigger buy stop orders and then create reversal if selling interest exists. Similarly, if price breaks below support, it may be targeting sell side liquidity before potential buying reaction. Breaking update traders, the US jobless claims data has just been released and the numbers are slightly weaker than market expectations. This is creating early pressure on the US dollar and supporting bullish sentiment in the gold XAUUSD. Right now, the market is entering a volatility phase, which means price may move aggressively towards liquidity zones. Traders should closely watch the 5050 support level, which is currently acting as the immediate defense areas for buyers. If buyers successfully hold this level, we may see bullish momentum pushing price towards the 506575 levels, 5080 levels. However, if the price breaks below support with strong momentum, the next downside liquidity targets could appear around the 5030 demand region. This is a crucial moment where institutions' participation usually increases. Professional traders will not rush into trades during in the initial volatility. Instead, they will wait for price confirmation and momentum stability before executing positions. Remember, during news events, the market speed increases, emotions increases, risk also increases. Discipline and patience become the most valuable trading tool. Okay, all right, everyone. As we come to the end of the today live section, I sincerely appreciate each one of you for joining and actively participating. Today, we analyzed important economic news, discussed market behavior, and understood how professional traders approach volatility and liquidity movements. I hope this section helped you gain better clarity and confidence in understanding market structure and decision making. Always remember, trading success is not built in a single day. It is built through continuous learning, disciplined execution, and consistent risk management. The market will always provide opportunities, but only prepared and patient traders are able to take advantage of them. My advice to all traders watching today, focus more on learning and protecting your capital rather than chasing quick profits. When knowledge and discipline become strong, profitability natural follows. If you found today's section valuable, make sure stay connected for upcoming educational sections, live market analysis, and professional trading insights. Thank you once again for your time and trust. I will see you all in the next section. Until then, trade smart, trade safe, and stay disciplined. Have a great day ahead. Thank you. Bye bye.